Hello IC traders, welcome to the channel. It's Mike FX here, and today we are going to look on a powerful concept on terms of entry models. So we are going to look on a static liquidity and entry which is based on liquidity. I know so many people who are very well in terms of finding analysis, top-down analysis, analyzing market structure, but when it comes on finding clear, precise entries, they fail terribly. So today we are going to dive in on an entry which is very powerful when it comes on finding entries on the lower time frame. So normally we can do a top-down analysis, and on a higher time frame we can clearly spot a clear area of interest, maybe a point of interest that we expect the price to be rejected from. So normally we can maybe the market is on a bullish momentum, and now this retracement coming into an area of interest. So we can see clearly on a lower time frame, this retracement comes on a lower momentum, which is giving us a clear break of structure before coming into an key zone, which is an area of interest from a higher time frame. So immediately after the market has mitigated the key zone, we can see the bullish momentum coming in, the buyers coming in aggressively, changing direction, giving us a change of character, which means the market has shifted price from bearish momentum into bullish momentum. So normally this is an range that we can be very patient in, and wait the market to, maybe there is an order block that is has been left down here, so that the market can come down, and we can find entries from this order block. So normally most of the traders, they go aggressively triggering their entries from, maybe there is an order block from here, and normally the market will react very well from an order block which is on a discount area. Remember, we are dealing on this range. This range that gave us a change of character after the price has mitigated our key zone from higher time frame. So normally this order block may be on a discount area, and we can have two order blocks, which one order block may be on a discount area and one order block may be on a premium area. So on a bearish momentum, most of the traders can trigger, maybe execute trades based on an order block which is on a premium area, and most of the time we can get that those traders got stopped out before price can skyrocket, giving us a good risk to ratio. So I urge all new traders to be very patient and wait for the order blocks that are on a premium area, are on a discount area when it comes on finding entries. So we can see clearly that here we got a change of character, and the price came clearly giving us another break of structure before mitigating this order block. So slightly above this area of interest, we can see clearly that we have an equal highs, an equal lows, which is lying before price has mitigated this order block. So the price will come, mitigate this order block, and skyrocket, giving us this another break of structure. And normally I prefer going aggressively wrong from this order block, and I'll target the opposite high. So this liquidity is the one we are going to be concentrated more on, giving us a clear confirmation that after this liquidity has been swept out, which is on equal rows, we are going to trigger we are going to execute our trades from this order block that is lying on a discount area on this range. Number two, on steady liquidity, we can get a liquidity sweep. when we are talking a liquidity sweep, we can get maybe the market has triggered, maybe the market has reacted from a daily order block area of interest, and now we are going to wait the market to sweep the recent row that swept that swept in liquidity from this area of interest that we marked from from higher time frame. So we can see clearly that after this row has been swept out, the price moves aggressively, breaking another block of structure, giving us another block of structure here. Shifting market structure shift, giving us a equivalent momentum, uh, which is a bullish momentum from this sweep of liquidity inside our key zone from an higher time frame. So let us dive into our charts and try to navigate and see if we can see clearly that sweep of liquidity and equal highs and lows inside our area of interest from an higher time frame key zone. So on a recent moves from USD JPY, you can see clearly from our 4 hour time frame. There is an order block that is lying below here from a higher time frame. The market came in aggressively, giving us mitigating this area of interest and slightly above this area of interest. We can see clearly that we had this equal loss that was lying here. So immediately after price came in, we can see that clearly the price reacted very well from this area of interest. So the main liquidity that was swept out was this equal rows that is here. So we can execute our trades from this order block. After this liquidity has been swept out, we can execute our trades from this order block and target maybe the opposite high. And clearly you can see that when the price come here, we can see clearly that the price swept this liquidity. Something I was demonstrating on this model. This will come, sweep this liquidity, sweep this liquidity, sweep this liquidity equal rows that is lying here before giving us a good momentum from this order block that is lying here, which gave us a change of character after mitigating this our area of interest from higher time frame. So we can clearly see that it is a powerful concept, guys. We can see use on finding entries after we have analyzed our top-down analysis from higher time frame and spotted our key zone from higher time frame. We can clearly shift into lower time frame and wait for a shift, market structure shift. Now we are going to see that the market has swept this liquidity. We are going to wait for a market to sweep out this liquidity before executing our trades. We can see clearly the market again came here after giving us after mitigating this order block from higher time frame. We can see that the market gave us a change of character inside our area of interest, and clearly if you are very patient, you can see clearly that there is another equal loss that is down here before this order block. So we are going to wait price to come and maybe sweep this liquidity, because this order block is a very powerful order block and has a mitigation block. And has a mitigation block inside here and together with a fair value gap. So we can see clearly that inside this area of interest, we can see that we have an equal rows that will support our confirmation before we plan to execute our trades. So we are going to watch out this order block, which has equal rows above it. And now we are going to wait for price uh, before we execute our trades from this order block. Immediately after price has swept out this liquidity, we are going to be very aggressive from this area, targeting another opposite high. You can see clearly that it is a precise entry that we can use to get a clear entry from our area of interest after we have done our top-down analysis. So let us see another example. We can see clearly inside here there was this order block. This is a rejection order block. This here we can see clearly that we have this sweep of liquidity. After this sweep of liquidity, price mitigated this rejection block, and now we skyrocketed upside, giving us a good bullish momentum from that order block, giving us this break of structure. So we can see that clearly if we drop down into a lower time frame, which is an 1 hour time frame, we can see clearly after the market mitigated this key zone, sweeping out this liquidity, we can see clearly the market gave us a change of character inside this of interest, and now we swept this out, this daily liquidity, and now we skyrocketed, is giving us a clear move into bullish momentum. So on this entry model, we are going to is an model that is very aggressive from maybe order block. We are going to wait first for price to mitigate key zone from higher time frame, and drop down into lower time frame, and wait for a sweep of liquidity, maybe equal lows, equal highs, strong highs, strong lows, which is going to be swept out before we trigger out our trades. So we are going to shift into goals and see if we can see the same criteria. We can see the same model, the sweep of liquidity inside our area of interest. Liquidity is very essential when it comes on spotting wood entries from area of interest that we have marked. So on gold, guys, we can see, let's see gold if we can get some sweep of liquidity inside our key zone that we have spotted from higher time frame when we are doing top-down analysis. So for gold, we can see clearly that we have an order block. We have an order block from a higher time frame, and when price come into this order block, we can see clearly this was a block of structure downside. For gold, we are bearish right now. We are pushing bearish. So immediately price gave us this block of structure. Price tends to react. Price tends to retrace back inside, trying to take in internal liquidities, which is an order block, fair value gaps, and rows that are formed inside a current trading range. So this is a break of structure, recent break of structure, and now we have this current trading range. And now price was reacting, giving us a clear retracement after this liquidity have been taken out. And now we were looking at on a daily time frame, and now we spotted this order block from a higher time frame, which is a daily time frame. So there is this liquidity that was lying inside our area of interest, and now look how this liquidity was swept out before uh, price gave us a clear change of character inside our area of interest. This is a change of character when you drop out, when you drop to 1 hour time frame, a lower time frame, and this 4 hour time frame, and see that clearly the price after mitigating this area of interest it gave us a clear change of character, meaning that the players have rejected from an area of interest, which is an order block that we marked from a daily time frame, which is an higher time frame. So after players gave us this change of character, we can see clearly this change of character, meaning that we have shifted from a bullish momentum into a bearish momentum. So we are going to execute this. We can see that there is a shift. There is a sweep of liquidity before price gave us a clear entry from this order flow. Order flow. So after this liquidity has been swept out, we are going to be very aggressive and execute our trades from this order flow. After this liquidity has been swept out. So we are going to remember there is this is an order flow that has a fair value up inside it. So we are going to execute our trades from this high that has been swept out. Meaning when it comes on finding clear entries, it is static liquidity. Using static liquidity spotting clear entries is a powerful concept when it comes on finding entries from lower time frame. So this is very useful after doing a top-down analysis and finding key zones, finding a powerful order blocks from higher time frame, which is maybe a weekly time frame, daily time frame, maybe a 4 hour time. We can jump down into 1 hour time frame, 15 minutes time frame, and try to find an area which is capable of being swept out before we execute our trades. So that is all guys about static liquidity. So watch out and try to back test as much as possible so that you can understand what it means on finding clear entries and precise entries inside an area of interest using state of liquidity, which combines equal rows and equal highs and make a sweep of liquidity, we have seen it is a powerful concept on finding such entries. So remember to like this video, subscribe and comment. Thank you so much.